brings us into the smart money trap. And again, we show you how to identify them properly. So first of all, we have two different types and we digged into it briefly. We have something we call a smart money trap and an FFS. So what's the difference? Very important difference though. A smart money trap is an area which fakes these false mitigation areas and gives a reaction, but then obviously fails. In order then to grab the liquidity higher and then properly mitigate. An FFS is literally when you have like these areas of imbalances, but price just shoots straight through that areas. Okay, so you might ask like, why is it called FFS? We will dig into it like in a bit. But now I understand like the smart money trap gives a false reaction of the supply and demand zone or the imbalance zones whatsoever, depending on how you refine them, and then fails afterwards. So it gives a false reaction to build the false belief, whatever, the false understanding, and then fails afterwards. The FFS smashes through that supply and demand area without a reaction and fails immediately. Okay, so we have different variations. It can look also like this. When you have multiple, depending, of course, highly what is going on to left. If that is obviously Asia range, whatever, that obviously becomes more obvious. But obviously, that's just an illustration to make it a little bit clearer of how a smart money traps looks. Gives a reaction. Then you have an inducement, maybe also to the left. Maybe this is also Asia high, having your inducement. And guess what? After the inducement, this in here, of course, will become a trap. Right? Because again, smart money traders seeing the buy trend and trading obviously this imbalance area to wanting to take it even higher. Right? So this trap immediately should become invalid to you. Right? For the FFS, it's obviously more difficult to spot because they just smoke through them. So if you have this area, and smart money traders mark it up, just smashes through it, and then gives a small reaction, makes them even more mad, like, oh shit, I gotta stop out here, but then it moves my direction. Let me take this one in here. Then I get another stop out. Or this zone in here immediately smokes through, gets the inducement, and then it's the same thing all over again. So the question is then, it happens all the time. Yeah, that's happens really all the time. So which is more likely though? Scenario 1 or scenario 2? Like if you see that's a smart money trap, gives a slight reaction, smart money trap gives a reaction, or whatever, FFS goes straight through it, smart money trap or can straight through it. So what's the difference? And the answer is, it doesn't really matter what scenario works out, because why? Each scenario will work out perfectly with our rules, since react, not predict. We used to predict, right? Obviously prediction, so we know the possibility or the possible ways to react, but never take trades based on these areas anyways. So the thing is, if you had to choose one of scenarios, 1 or 2, should be more likely you will obviously line up with timing if you really want to choose something. We have so many confluences to choose these areas, you should not randomly choose them anyways. And on top of that, we know that these areas become smart money traps anyways later on, and it doesn't matter if it's a trap or an FFS, because they should fail anyways. Smart money trap just gives a reaction, then fails. Reaction, then fails. The FFS just smashes through them. There's no difference. They both fail. You just need to understand they fail. Just this one gives a reaction, this one not. But both areas will fail. Okay? And of course, we can enter those both areas later on, and we also call it cup trades whatsoever. We will teach you that, of course. We will also have something that we call the EDM and LIT, and of course, that makes it easier. But again, dig into this example to understand it better. At this point in here, what do we have? Of course, we have the first channel downwards, but the overall main upwards trend. What do we have before Asia? Breakout, huge channel upwards, building this channel in here, perfect timing, inducement in here. So the cycle is completed of the stage. So what should happen next? Is this an area where you should take a buy from and like this? Yes or no? Of course not. Of course not. So, but can we technically expect this? Yeah, we could. They could give a reaction in here because they're just mitigating this area, making a reaction, but then fail. But does it really matter? No, it does not matter. The only thing we know at this scenario is that this zone will fail. It will fail. But if it failed like this, or just like this, it doesn't matter. The zone will just fail. So we can label it immediately a smart money trap just based on what you learned so far. Okay? Again, then internal break of structures, mitigation, whatsoever, you know all that stuff. But this zone in here will fail just based on the daily structure or daily play what you learned in this scenario. Okay? So in this case, it did something like this. Choop. So guess what? You just relabel it for an FFS. Technically, you label it first as a smart money trap because you don't know if it gives a reaction, but you know it will fail. The only question, will give it a reaction or no? You're not interested in the zone anyways. You just label it up for your own understanding that this zone will be a smart money trap. But if it smokes through like that, obviously you label it an FFS. So again, even if you read it already, why is it called an FFS? Because the smart money traders that trade these zones, they place limit orders in here. So they place a limit order here and put their stop loss below here. So what happens to them? The limit order gets triggered and they get an immediate stop loss. And that's why they're like, for fuck's sakes, right? And that's why it's called an FFS instead. Because if it's a smart money trap, at least they're getting their pending orders triggered, and then they get a reaction, and then basically they're getting a break even. But if in an FFS scenario, they just smoke through them and just stop them out immediately. That's why it's an FFS. But you should know that this zone, anyways, by the daily play, will get broken anyways. Only difference is give it a given reaction and then break or trade straight through it. Okay? And again, smart money traders at this stage are like, what? For fuck's sakes. Like, how did my smart money method just lose? Right? Anyway, so the FFS. FFS explains where there was previous inducements and trapping, right? Remember, see the pain in the market. If you have this very clean imbalance zone and they just get smoked, of course, like a lot of people get stopped out immediately because they're putting their zones of interest in these areas without a bigger concept of the whole thing, right? That's just areas that grab immediately liquidity, and obviously that will become areas of interest later on because that's also liquidity traps. But you should understand that an FFS is technically a smart money trap zone, which you can easily identify with the cycle and the other components we will give you later on. And you expect them to be broken anyways. Okay? So note the FFS switcheroo. The additional understanding for this happen is the losses from the smart money traders, pretty much creating the FFS, right? And that's why they usually with speed because they're immediately grabbing liquidity after and then usually gives a reaction after. Okay, but let's look at it again. So what is going on in here? We know that this is the extreme of the push. And of course, smart money traders, whatever, see the lower low in here. And they think this is the valid zone, right? So again, what? Of course, getting the reaction in here. So they think it's all good and done. Then they're getting in a retest in here. But we know, no. That's a smart money trap in here. Build up low side, inducement low to push price higher, stopping those smart money traders and go for the extreme mitigation area. They mitigate that one. Now we know the play is done. We can trade in line now, getting now this break of structure in here. So guess what happens? We take the mitigation zone in here. Right? So that's a possible zone we can re-enter, of course. There we go. Gets the mitigation here. And then again, creates imbalances in the process again. So we can take this trade in here also later on. This direction. And then the day is over. Makes sense. Yeah, for Fox, it happens to me. yeah. It happens to everyone of people who are taking these concepts. Because again, they don't understand the bigger concept of it. And again, you're placing a limit order here. And in best case, again, smart money trap, you're getting a reaction, you're getting all excited. And again, for FFS, they just smoke through it, right? Question. Which of those two will be a smart money trap? Is it A or B? Hint, follow the cycle, or above, all else where liquidity lies, right? Of course, the answer is B. B will be a smart money trap because, again, we need to grab liquidity first. And that will have a huge role if we take a look to the left later on. Because what we did so far in these pictures, we isolated the day and cut it out here. Just showed you always like this to the left. But now we're starting to look to the left a little bit more to complete this overall cycle and see where price actually will stop. Because we showed you when it technically can stop, but now we show you also where it also can stop. Okay? So what can we expect in here? Again, always think in terms of liquidity. That's a really obvious zone. Again, smart money concepts getting very obvious and very well used. Everyone in here sees this huge imbalance. So that becomes a very obvious zone. All right, so guess what? Is it gonna be targeted? Most likely. So what are they doing here? Obviously, they're just ranging, never broke out of Asia, even faking the inducement low. To do what? Obviously, most likely to go higher. Now building the short channel in here. Right? Now we look at the timing aspect of it. Right? So again, timing is obviously London open, as you know so far. So what should happen next? What we can expect? So first of all, we see that timing for London open would be in here. Okay? So what we can expect easily now in our minds is something like this. Or something like this. As you can see here, this one will run a little bit short, as this is the timing, and then this cannot be a smart money trap. And the timing would line up. But also, this would be a possibility, as then timing would line up perfectly. But again, as in both scenarios you see, this area should be taken away. The only question is, will it become a smart money trap, gives a reaction, and then pushes higher? Or does it smoke straight through it? Okay, so again, what's more likely? It does not matter. It does not matter what should happen because, again, we expect the break of the structure anyways. It does not matter. So in this case, as you can see, it just becomes, and for fuck's sakes, because the timing then lines up. It's already 9 o'clock, as you can see. And they obviously want to do it in London. So this becomes not a smart money trap, but for fuck's sakes, grabs liquidity high, and then goes into the mitigation zone above that to complete the cycle. The cycle, as you learn it, is still the same. If you just look at the isolated day, again, same thing. Building a channel, inducing low to go higher, doing before what? Building the low channel here. Huge inducement vector candles. At this point, again, you should know that this is probably going to be liquidated. The only question is it given a reaction or smokes it through. In this case, it just smokes through like nothing. All the smart money traders are getting an immediate stop loss. Their stop loss is above here. Worst case, maybe even here. But worst case, the stop loss is above here. They're getting immediately in stop loss. Now all the liquidity is grabbed. All the momentum shows to the upside. London open. Timing. Now the mitigation makes sense. Price can be worse. So this, of course, becomes a smart money trap area now, because, of course, we have our cycle completed for the upside. And guess what that is? Asia low with a quadruple bottom whatsoever. So guess what? Inducement high, completed the cycle, London open. So, of course, this zone will be broken. It can be a smart money trap, gives a false reaction, but should be broken anyways. See how that works. Right? It's always the same, guys. Again, this becomes a smart money trap for sure. The only question is, does it give a reaction or not? It did give a reaction, right? So now, of course, we can expect a valid mitigation here and then to go lower and grab this liquidity. And then, of course, the day will run to an end. So everyone understand this overall play. It's literally the same thing we did over and over again, just we including now stuff to the left with the understanding of getting liquidity grabbed first and then mitigation. It's always the same. Build up, inducement, immediately grabbing liquidity into the mitigation area, timing aspect, perfect play out of Asia range, building the buy channel, building the vector candles, timing, and of course after that, the play is done. So again, if you want to trade that stuff later, of course, something like that can be a possibility, or of course the mitigation of the inducement, or of course afterwards the mitigation of the point of structure, but obviously later about that more. So again, just very easy one. Again, just to sum it up again, to get it in your head. On the lower time frames, again, it should look like this. It's always the same. Build up, again, before the false inducement low, into, guess what? Mitigation area. On the lower time frame, of course, then inducing high. Then this is the inducement in here. This is the internal break of structure. This is the main break of structure. Where's the mitigation zone? It is here, comes back, mitigates later. That's how you break it down later. Okay? And of course, if you dig into that a little bit more detail, it's the same thing all over again. Having the inducement highs, having the internal break of structure, almost. First, you have the build up, of course, and then the break of structure here. And of course, this is the push that led to this internal break of structures, which also was the equal lows. Guess what? This is the inducement. That's the mitigation of the inducement. That's another mitigation. But again, the confirmed one is after this internal break of structures in here. That, of course, creates the liquidity, the imbalances in here. Should come back to mitigate it. Quite missed it a little bit. Then again, you're just trading the overall cycle after the main break of structure. This is your imbalance area now. Doing the same thing, getting a build up just before the mitigation area, faking the buy channel, breaking the structure, coming back, inducing this structure in here, just to do what? Mitigate these areas to complete the overall play. But again, just remember that this in here is something major you're looking for. Asia range, inducement, minor inducement first. This might be a smart money trap to the left, but more about that later. Okay. Then the major inducement for the day in London Open, internal break of structure, leaving imbalances in the process, comes back, break that down to the 1 minute. This plane here, this is the 1 minute now. This is again the 5 minute. 1 minute should see like build-ups after the break of structure, inducement of this internal play. This is the inducement, but what does the inducement do? Mitigate the overall play in the bigger picture, and then you can take the buy trade going longer or long. Awesome.